Hello, in this video we'll discuss composition scheme. Section 10 of the CGST Act deals with composition scheme. Composition scheme is beneficial and it is optional. Normally beneficial provisions are optional. Before going into the details of eligibility criteria, conditions, restrictions of composition scheme, let's first understand how to decide whether to opt for a composition scheme or not to opt for a composition scheme. It needs to be decided based on what is the nature of transaction of the business. If most of the business transactions are B2B, then the person should not opt for composition scheme. If most of the business transactions are B2C, then the person may opt for composition scheme. Why? Because if the transactions are B2C, then the the customer is ultimate consumer. The VAT chain will stop there. He will not going to claim the credit further. Then the person may opt for composition scheme if most of his business transaction is B2C. However, if most of the business transaction is B2B, the person should not opt for composition scheme. Why? Because he will not take ITC credit, will increase the cost of his purchases. He will not charge a GST, will further increase the cost of sales. The person who is registered under GST, when he purchases the material from the dealer who is registered under composition scheme, will have a higher price than the person who is registered under normal scheme. Therefore, one need to decide basis what is the nature of transaction. If it is B2C, most of the business transaction is B2C, one may think to opt for composition scheme. However, if most of the business transaction is B2B, it is better not to opt for composition scheme. Now coming to the details of the eligibility criteria. If the basic eligibility criteria is the aggregate turnover in the immediately preceding financial year is up to 1.5 crores, then the person is eligible to opt for composition scheme. 75 lakh in case of special category states. Then the GST rate for composition scheme is for manufacturer 2%, for a entity who is being a restaurant service provider 5%, and for trader it is 1%. For other services it is 6%, provided the aggregate turnover is less than 50 lakh. Here we need to wait for 2 minutes and think that how to decide whether a person is a manufacturer, is a canteen service provider, or is a trader. We will take an example of a person who is doing a food supply. Suppose a person is preparing a food and selling it over a counter, then he is manufacturer. Suppose the person is preparing a food and allowing customers to sit, having a table, chairs are there, and eat the food, then he is falling under second category, that is a restaurant service provider. 5% GST is to leviable. Suppose the person purchasing a food and selling the food over a counter, and he is trader, 1% GST rate is applicable. This is a way to classify whether that business is manufacturer or service provider or trader. Then who are not eligible for composition scheme? A casual taxable person and non-resident taxable person are not eligible for composition scheme as they are not having a fixed place of business. Then a person who is supplying through e-commerce operator is not eligible for composition scheme. And the manufacturer who manufacture notified goods, that is ice cream, tobacco products, is not eligible for composition scheme. The person who is supplying non-taxable supply is not eligible for composition scheme. For example, supply of alcohol for human consumption and petroleum products, natural gas, etc. These are non-taxable supply and he is not eligible for composition scheme. And person who is doing an interstate supply, that is, person is having a business in Maharashtra doing a supply to Karnataka, and he is not eligible for composition scheme. There are restrictions. What are the basic restrictions in composition scheme? Is that a person cannot claim ITC on his purchases. Second, he cannot charge a GST on his output supply. It's a cost of the business. These are the basic conditions in the composition scheme. Then, in case the turnover exceeds during the financial year, in between, if the turnover exceed 1.5 crores, and the person needs to come out of composition scheme. When the person come out of composition scheme, he needs to charge a normal GST on his output and eligible for the input tax credit on the goods which are in the stock. Similarly, if the person is incorrectly opt for composition scheme, that is, he is not eligible, but he opt for composition scheme, then that person needs to pay the GST at a normal rate on all his supplies made under composition scheme. Further, he is not eligible for input tax credit. Now, some of the questions. Some of the questions relating to the composition scheme, tricky questions. First question, when the person doing a supply consists only of a exempt goods or exempt service, can he opt for composition scheme? Suppose the supply consists only of exempt goods or exempt services. There is no need even to do the GST registration. See section 23, 24, 25 of the CGST Act. So there is a question of composition scheme. There is no question of composition scheme. Now coming to the next part. Suppose a person, a dealer, making a two supplies, that is both the supplies, taxable and exempt. Take an example of departmental stores. He is having many products which are branded, taxable supply. He is having many things which are sold as unbranded, that is wheat, rice, loose wheat, loose rice. These are exempt supply. Can he opt for composition scheme? Yes, he can opt for composition scheme. But the next question is important. That on what amount, in such a case, when the person is supplying exempt goods as well as taxable goods, on what amount the GST is payable? In case of manufacturer, the 2% GST is payable on the total supply. And in case of trader, 1% GST is payable only on taxable supply, not on exempt supply. Suppose the dealer is having interest income. Interest income is exempt supply. Can he opt for composition scheme? Yes, he can opt for composition scheme. Now next question. Suppose a dealer is supply of petroleum products. Along with that, he is selling lubricant oil. Whether and that turnover is up to 1 crore. Whether he is needed to do the registration? Yes, he needs to do the registration because aggregate supply, aggregate turnover. For the purpose of registration, include non-taxable supply. However, when the person is doing a non-taxable supply, is not eligible for the composition scheme under section 10 of CGST Act. These are some tricky questions. Think on. To opt for composition scheme, he needs to file CMP 02, and once it is filed, there is no need to file every year. It is filed once, it will continue. Then the person who wants to come out of composition scheme, he needs to file CMP 04, within 7 days when he want to opt for come out of the composition scheme. Composition scheme person who is registered under composition scheme needs to pay the GST under reverse charge. When he avails the GTA service, advocate service, he needs to pay the GST under reverse charge and is not eligible to take the input tax credit. These are some of the things relating to the composition scheme. The purpose of this video is not to give the information that something I know, something you don't know. But I want to leave you with a deep thinking on the questions that we discussed in the previous slide for your overall understanding of the composition scheme and the GST law. Thank you.